Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, we got things to talk about. We're looking at Manhattan supply. There's not much of it, 4712. Show us that chart.
Yeah, that's a decrease of almost 1%. That's probably the shallowest decrease we've seen in several months. And I think we might see supply bottoming here in anticipation of a listing wave later this winter.
I would agree with that. I think we're in a bottoming process right now, looking ahead at the listing season. We've been talking about this. We have a sell side liquidity call that we've issued last week for any sellers that are willing to listen and any brokers that are willing to convey that message to their clients. That means that we think supply is bottoming. I agree. Let's move on to pending sales, see what's going on. Demand 42.58. Johnny, show me that chart.
So pending sales down a little over 1%. So it's falling a little bit faster than supply this week, but on the whole, pending sales is the much stronger number, which is why you're seeing the pulse at still elevated levels.
Yeah, and I wouldn't be surprised if the front end of the pipe of deals coming in every day going forward is a little on the weaker side, because again, first the stuff comes on, then at a lag, the stuff goes to contract. So we're a little bit away from that because the stuff is not yet coming on. We'll talk about that in a second. And I just want to point out this market pulse. That was at 0.92, Johnny, last week when we issued the sell side liquidity call. That is now starting to go down. So people are starting to, you can see what we're talking about. We think that's going to go down more before it bottoms. We'll keep an eye on it, Johnny. Let's switch to the weeklies. I'm looking at supply. 293 things came on the market. That does not look or feel like a lot. Johnny, show me that chart.
You know, it's not bad. It's been an extremely consistent, right around 300 for the last few weeks, but you're right. You're a little bit shy of where it normally is for early January.
You know what it is, Johnny? Last year, we had so many listings come on the market and we had so much deal volume that the net effect of it was not a lot of supply. It's like you would think supply would rise, a lot of stuff, but so many things were going off market, so many things were going into contract. I got used to the fact that we're going to have 2,500 listings coming on at the peak season. That means 550, 600 a week. We're far from that. So I'm questioning if 2022 is going to bring in the capacity of listings that 2021 did. And I do not think it is. And I think that's a macro force that not a lot of people are talking about that could set up a low inventory environment for a few years. We will see how that plays out. Johnny, let's move on to demand. Contract signed 179. That's a notable dip down. Show me the chart.
It is. That's almost a 23% or so dip down from the week before. And we may have seen the bulk of weekly contract signs pass us by. We may be into sort of a normalizing phase here as we get into sort of this next wave. So, just as you'd mentioned that last year we had this wave of listings coming on and on and on. Same thing with contract signs. We're seeing supply lowered. We might be seeing weekly contract signs lowering as well, and sort of getting back to a normal pace. It's not bad. We're only down 2% compared to where we were a year ago. But, we are at a slightly decreased level here, Noah.
Yeah, and I think you're onto something, Johnny. I think buyers have exhausted the inventory that's out there, and there's just not a lot of stuff out there. And when buyers exhaust the inventory, they tend to wait for the new wave to come on. And in a low inventory environment, that's the kind of dynamic that happens. And it's hard to do a lot of deals in a low inventory environment, especially when most of that inventory is kind of stale and existing and not really fresh inventory. So this might remain low or lower than what we're used to until that wave comes. It's a very, very, very prescient point. Let's go to the chart du jour. We wanted to kind of dissect price action and which way that might be pressured. Is it biased to the upside? Is it biased to the downside? What leading data do we have to kind of tell us what's going on? And John, you whipped up a nice chart here. Let's just explain to the viewers. The blue line is going to be the median asking price per square foot of all the listings that are on the market trying to sell right now. Now, we understand co-ops, a lot of co-ops don't have size. We used whatever we had. It's still a lot of listings, so we have a decent trend here. And that blue line is going to basically tell you sell side optimism. Are those asking prices trending lower? Are those asking prices trending higher? How do sellers feel, right? And then the red line is going to be your median sales price per square foot based on the contract signed date. So very, very, very timely. And that is going to be your leading indicator. That's the red line, the leading indicator of future price action and what to expect. So when I look at this chart, it's quite clear to me that both asking prices right over here and sales prices are pressured higher at the same time. Johnny, what do you see?
I see exactly the same thing, though. And the other thing I'd point out is that the recovery that we've seen in the sales price per square foot, median sales price per square foot based on the contract sign date since the COVID low has been notably strong. And I mean, there's a bit of a trend to it. I mean, it's a long sort of trend. If you compare
Yeah.
going all the way back to 2015, I can't see another uptrend that's lasted, a year and a half. Everything else has been kind of going sideways. So this market has some strength to it in terms of pricing. And if you think away, the media is going
Yeah.
to be reporting on this in a couple months, we might see some shocking year-over-year results, which are going to, make people's eyes pop out and think that, oh my gosh, Manhattan is entirely unaffordable and prices are going crazy. But just, keep an eye on what's going on here, folks.
Yeah, and we also like to talk about the spread, right? We like to talk about the spread between these two lines. And when you have a wider spread, there's more of a disparate market, or a weaker market. And when you have a tighter spread, you can see that it's a stronger market. And when I look at that spread right now versus, down here or down here, that spread is narrowing and it's tightening. It's getting closer together. That is just another indication of the recovery. So I agree. I think that the rising price action does have legs. Nothing goes in a straight line forever. You're going to have things go up and then goes down and they go up
Right.
and down and up, just like right over here. I think people have this wrong impression that thinks, why doesn't everything just go straight up? That's not how cycles work. So I do think, and we've said this, John, over and over for anyone that's going to listen, I think that Manhattan is in a early stages of a secular uptrend that's going to go up and down, a little bit up and down, but biased to the upside, basically because we're not at full capacity and we're just going to slowly get back online. So when you think about the price action in Manhattan, we've recovered the COVID lows. We have not done much anything else. Like
Right.
Everything else in the world has had their asset prices just go parabolic during this whole stimulus fueled year and a half pandemic kind of thing. Manhattan real estate, the bid has priced in the pressures. So the reason Manhattan has not done those things is because there are still pressures. There's still macro negative deflationary forces affecting Manhattan. It's still there. And that will take time to get removed one at a time. And that's why I think it's going to be a secular recovery. And this is a nice chart to show that.
Couldn't agree more.
I love it, Johnny. I love when you agree with me. Johnny, thank you for pulling up all those charts. They're fantastic. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers. We have a forum right down here. You can just post. If you want any of the reports we're talking about today, they're going to be right over here in our weekly reports section. Other than that, this has been your weekly Manhattan market update. We'll catch you next time.